Traders. This is Reza and you're listening to my market analysis for January the 12th. Last time we looked at the charts, I clearly told you it was looking very bad, and based on the daily chart, everything was indicating that we were going to completely delete this last leg down and that we were going to come down towards 1900 and then possibly for a test of this 1863, with the last frontier being at 1835. And since then we have had a non-stop drop. As we can see, 1 2 3 4 5 6 7 8 days straight down, and today finally was a day that we tried to bounce a little bit, but as we are going to look at the profile, the bounce itself was quite of a failure, because we managed to close at the very middle of today's range. Definitely you are going through an extraordinary crazy market condition with a very wide range of an average of 35 to 40 points back and forth, and we are actually within one of the strongest seasonal where we should have seen a very strong rally to the upside. Everybody anticipating to see the numbers of sales generated by the holiday season, etc., and all the fresh money coming into the market for the beginning of the year, but rather we witnessed one of the most horrific beginning of January ever in the history of the market. So from a daily point of view, it is looking absolutely horrible, and possibility of a further continuation down towards 1830 to 1800. 1800 is very wide open. However, in the very short term, because this is so oversold, that we could definitely see a possible rally up to deviate this oversold condition. So we're going to use a little bit of this candle chart to find out where our support resistances are. As I just connected the two top of these extreme highs here, our first line of support will come in at 1950. If we can clear through 1950, then we should be coming and touching the main trend line down at 1965. So between 1950 to 1965, if we do go up there, market should encounter significant level of resistance. As far as the downside is concerned, in the very short term, first level of support comes in at 1914. If we cannot contain 1914, I am then suspecting that price should come towards 1900, and if 1900 doesn't hold, we are going to test this 1894, and if that 1894 breaks, we are going to be exiting this multiple wide session congestion directionally to the downside, and the outcome could be quite brutal. As far as what we should do or not do here, we are seeing that several profiles are now sitting on the side of each other. That is a clear indication of a trading range. Therefore, the best bet is to wait for price to come within the areas of resistance that I talked about, 1950 being one. And if it comes into 1944 to 1950 and then it exits back down with a rejection, that would be a potential selling area by protecting price above 1950. And if it comes down towards 1894 to 1900 and then holds an exit back up, that area could serve as a buying zone, as the low would be holding. This middle between 1950 to 1894. The middle has to be avoided because as you are seeing, both longs and shorts are completely getting destroyed by this lawless back and forth. Be reminded that we should be starting to hear earnings numbers being released from any time today, tomorrow, into end of next week. End of this week we are going to see option expirations, which always happen on the third Friday of the week. So this pattern of excessive high volatility should continue, and it is extremely volatile and very dangerous market. All I can tell you is the following: if you do not know from what location to trade and what location has the best probability of success, I can assure you, you are going to get destroyed in this market. So be very careful with what level you choose to conduct business from, because that will make a big difference between success and failure. As far as crude, an absolute, complete, total carnage. The moment the overnight showed a little bit of a bullishness by closing at its high range, the second that we opened and tried to go past 32, we got a reversal, crossed back through the open, and it was a massive aggressive sell-off almost for the whole day. Even though that we have rotated back down here and not having been able to close below $30, we still managed to close at the lower range part of the day, which is still very negative and bearish. Therefore, for anything bullish to happen now, crude has to come and trade above 31. If we do trade above 31, then I can definitely see price coming and deleting all this area of the profile above and go towards 32. If we do break 30, I cannot tell you the type of reaction we will get, because obviously you do not have to be rocket scientist. The more we go down, the lower this thing becomes. At some point it's gonna stop, because crude is not a piece of toilet paper with a stamp of Amazon on it. Crude is a commodity that everybody uses. So it will reach a point where it cannot go lower than that, because it has a value to it. It's real commodity. So therefore, one has to start to be very careful on the short side past 30, because I don't know how much more is left to the downside at this stage. But that needs to be seen. If in case we do break 30, you have to carefully monitor to see the reaction. But it is starting to really get into territory of absolutely disastrous oversold. And one of these days, I would not be surprised nor shocked that if we see 4-5 points rally kicking in just on the base of short covering and profit taking from market participants. So this is for today's analysis. If you wish to learn market profile, you can get all my 5 courses and 1-year trading membership for my room, all at the cost of $550. You can get it from my website profiletraders.com, and everything is 30 days money back guaranteed. Thank you for listening, and talk to you tomorrow.